Thank you very much, Nicole. We've got Keith Fitzgerald and Lizzie McDonald on what is propping our markets up even as China's are careening. What do you think's going on, Lizzie?
Well, you know what's really interesting is it's still an earnings season, but, we were on the phone with Wall Street, and, we've been talking a lot about China. And what they were telling Fox Business is that, when China's had a problem with Taiwan, they could shoot off a missile in the Strait of Taiwan or conduct naval exercises, but you can't move Taiwan. Money moves. So that's what's happening. I think that the People's Bank of China and the government in China is at a loss as to what to do with the cratering of so many stocks over there. They have been massively in the market there, and I'm hearing now that the government is considering about buying even more shares in listed companies in mainland China.
Why aren't we being more affected by this, Keith? I mean, is it something I'm missing here? Is it just that we don't have that much exposure, ironically, to this market? We do have exposure if they start seriously hiccuping, don't we?
Well, you're on it. We don't have that much exposure. People forget that Chinese markets, for all the global transparency we talk about between America and Europe and South America, China's markets are still pretty inwardly focused. There's only 4 externally focused banks. Most of those shares are traded by Chinese nationals inside the mainland, so there's not a lot of give and take for Western investors.
Do you think, though, that Western investors would think twice, though, if it looks like they're in the middle of a meltdown?
Yeah, certainly, because you don't know. I mean, it's not market forces supply and demand. It's the government basically controlling the listing prices effectively. And
what's the government doing?
The government
it's much different than our Fed just buying up securities and all. They're buying stock, right?
Yeah, they're actually buying stock. That's the good point. And they're also doing things like pumping liquidity, outlawing short selling, which we did during the height of financial crisis. 799 financial institutions. The SEC banned short selling. But it's even more than that. The government is now, this is what Wall Street's talking about. The government could take on the leverage that's in the markets. Wow. And what does that mean for us? It means the U.S. dollar strengthens as China's currency weakens. And so what does that mean? That means a big-time hit to U.S. companies that do sales overseas as the dollar strengthens when they translate the profit overseas back into the stronger dollar. And, already we're seeing a quarter of the company, many of the companies saying a stronger dollar is affecting their earnings picture. You see that at Kimberly-Clark, Pepsi, and Yum Brands talking about it in their earnings releases just recently.
Do we benefit, though, being the better game in town, the global town, Keith, that whatever the world's ills, whatever our ills, we have fewer of them by comparison?
Well, I think that's a very astute point. We're the best-looking horse in the glue factory right now, and this stuff highlights that kind of thing. But you know what the real danger is here, Neil? The real danger is not that China's propping up the markets, not that they've got to learn about capitalism the hard way. The real danger is that the Chinese government uses this as an excuse to stop the economic reforms that, in fact, have gotten us to this point.
Oh, that's a very good point. Guys, I want to thank you very, very much.
Sure.
In case you didn't hear